Hello everyone. Um, I have decided to at least record some of topics for you to understand it well, and you won't depend much on your modules. So I hope this will help you in and learn about accounting in the partnership and corporation. So today we will be tackling about partnership dissolution, which involves the liquidation process. So liquidation as defined, it is the process of winding up the affairs of the business. So this process involves the conversion of non-cash assets to cash. When we say conversion of non-cash assets to cash is we are going to sell the non-cash assets that we have. Our example of our non-cash assets are those assets that are not cash. Example are accounts receivable, machinery, those that are under your PPE or property, plant and equipment, building. So those are examples of our non-cash assets. So we'll need to sell them for us to realize cash. So the next is to pay the liabilities, and then if there's a remaining cash after settling our liabilities, we'll need to distribute it to the partners. So liquidation also is also defined is also or happen also if the partners do not wish to continue the business operation, meaning um, they wanted to end the partnership. So the partnership won't exist anymore. So partnership liquidation may be by total lump sum, meaning all of your identified non-cash assets will be converted to cash. This process is called realization. So all of those non-cash assets will be combined as one and then sell it to someone who's interested, and then by buying it at once. And then the second one is by installment, meaning the non-cash assets are sold by installment. So let's say one buyer is only interested to your accounts receivable. So, and then you still have other remaining non-cash assets such as building. So the first to be bought is are your accounts receivable first. So there is still a remaining non-cash assets. So this process will be called installment. So here are the important steps in the liquidation process. So as I have mentioned, we'll need to sell all of our non-cash assets, and then we'll need to record the gain or loss. So most likely, the non-cash assets are sold at a discount or less at it is sold less than its book value. So there is a loss. If your non-cash assets were sold more than the book value of your non-cash assets, there is a gain. And then if there is a gain or loss after selling all of your non-cash assets, you'll need to divide it. Mostly is to use the profit and loss ratio. The third one is to pay your liabilities to outside creditors. These outside creditors, example of this are your suppliers, um, probably customers, and then we have to settle also loans to the partners. This happens usually when a partner uh, lends money to the partnership. So there is a payable from the side of the partnership to the partner. The last step is to distribute the remaining cash, if there's any, after you have settled all of your obligations. This is in accordance to their capital balances. So we have an example here with regards to the lump sum liquidation. So as presented to you are the Rolls and Royce merchandising balance sheet as of December 31, 2008. As presented, there is a cash of 50,000 and the non-cash assets were combined at once and identified as non-cash assets amounting to 400,000. And there's also liabilities, accounts payable. Your accounts payable here is considered your liabilities to outside creditors. And then the loan payable to Ray and the loan payable to Rolly. This are Ray and Rolly lent money to the partnership. So they are the next or the liability to be paid after you have settled your liabilities to outside creditors. And then the capital balances of Ray, Roy, and Rolly. With this example, Ray, Roy, and Rolly decided to end the partnership. So by meaning you end the partnership, you'll need to stop the business operation, and then you'll need to settle everything else. So the first one is, let's say Ray, Roy, and Rolly sold the non-cash assets for 250,000. So this is less than the book value of your non-cash assets. So there is a loss of 150,000. So that's 400,000 minus 250,000. There is a loss on the sale of your non-cash assets of 150,000. So here is how you are going to prepare the statement of liquidation. So we have separated the assets, the liabilities, and then the capital. So you have presented here the balances before the liquidation based on the balance sheet, which is 50,000 for cash, for your non-cash is 400,000, and so on. So the first step, as we have discussed in the previous slide, we have sold the non-cash assets for 250,000, which is less than the book value of the non-cash assets of 400,000. So there is a loss of 150,000. So the 150,000 is called the loss on realization. And then the next step is to divide the loss on the sale of the non-cash assets. So based on the profit and loss ratio, so we have 25% for Ray, 30% for Roy, and 45% for Rolly. So the loss is 150,000 times 25% for Ray. Ray has a share in the loss of 37,500. And same with Roy, with 30% profit and loss ratio. He has a share of 45,000 and 67,500 for Rolly with 45% profit and loss ratio. So since this is an additional cash, so we'll need to add it to our cash balance. So that's 50,000 plus the 250,000 amounting to 300,000. So we have no non-cash assets anymore because we have sold it. So the remaining amounts that we have are the accounts payable, the loans, and the capital balances. So the next step is to pay your outside creditors. So as I've said, the accounts payable here is considered your outside creditors. So you'll need to settle this first. So we have to pay 200,000. So as you have noticed, the 200,000 here is to be deducted from your available cash balance of 300,000. So 300,000 minus the 200,000, your available cash balance is 100,000. But then you don't have accounts payable anymore because you have paid it. So the remaining balance liability that you have is the loans payable to Ray and Rolly, amounting to 20,000 and 30,000 respectively. So the total amount of the loans payable to partners are 50,000. So the next step is to pay the loans to the partners. So that's 50,000. So 100,000 minus the 50,000. So we still have the remaining cash balance of 50,000. So we have settled all of our obligations, all of our liabilities. The last step is to distribute the remaining cash to the partners based on their capital balances. So we have 2,500 for Ray, 15,000 for Roy, and 32,500 for Rolly, which is also equal to 50,000. But before we proceed with this one, if we have completed our statement of liquidation, we will need also to record journal entries in relation to the statement of our liquidation. So here are our journal entries. We have a loss on realization of 150,000, and then the non-cash assets were sold for 250,000. So that's the non-cash assets are 400,000, we'll need to debit cash, and then we'll need also to debit loss on realization and credit the non-cash assets. So the first step is to record the sale of our non-cash assets. The next step is to divide the losses. So the loss is 150,000. We have divided it using their profit and loss ratio. So Ray has 37,500, 45,000 for Roy, and 67,500 for Rolly on the debit side, and the loss on realization is 150,000. The third step is to record the payment of liabilities. So as I have mentioned, we'll need to settle first our obligations to outside creditors. So we have to settle first our accounts payable amounting to 200,000. So we'll need to debit accounts payable 200,000 and then credit cash 200,000. The next step is to settle the loans payable to Ray and Rolly, which is 20,000 and 30,000 respectively. It's on the debit side. And then we'll need to credit cash as we have paid them, amounting to 50,000. So this is the fourth step, to record the payment of loans to partners. The last step is to distribute the remaining cash to the partners based on their capital balances. So the capital balances based on the statement of liquidation that we have or that we had is 2,500, 15,000, and 32,500 respectively for Ray, Roy, and Rolly. And then we'll need to credit cash 50,000. This is the last step, to distribute cash to the remaining partners. There are other cases that you'll need to do. At least you need to explore, to practice how this process is done depending on the scenario. Sometimes if you have sold the non-cash assets for a gain, so that is a different case. So you'll need to read further. We have books online, so utilize Google, but you'll need to get the information, the correct information based on our topics, because sometimes in Google, students tend to get the incorrect information. So I hope this video would help you understand some accounting methods with regards to partnership, especially for this topic, the liquidation process.